Let me now bring on board Sandeep Bhatia, Executive Director and Head of Sales with Kotak Institutional Equities. Sandeep, good morning. Good to have you back. Sandeep, do you worry about the market dynamics? Liquidity has reversed, macros are bad, and Nifty has gone below key technical levels. I know I'm flagging off all the bad news, but there's hardly any good news.
Yeah, I think everyone in the market is worried about where we are headed. I don't think there is any solace to be found in the fundamentals. The only positive news flow for a long time, the last couple of years, has just been the fact that the global central banks are going to provide easy liquidity till kingdom come. So clearly, other than that, things are struggling. We saw not so good news from the US, but I would still think US is still on a positive, upbeat path. What has actually been the biggest negative surprise is the way India has, slowed down dramatically during the last 6 months. And clearly there are no hopes of any immediate rebound. So that is, in fact, the real hit for the markets. The rest of the world was in not a great place and continues to be there, struggling. So, I think it's India's problem which are plaguing the market right now.
So, Sandeep, I mean, what happens to the market from the 10% near about fall that we've seen so far? Just when people are getting ready to start nibbling in and deploying the cash back, do you think the market is purely nothing but setting stage for a deeper fall from here onwards?
Look, everyone hopes that we don't get a deeper fall, and the reason of that hope is that we'll see some movement in terms of some decisions being made by the government. On the flip side, there's always a worry that the political instability will recur, that will take away all the momentum which can come through in the market if there are correct decisions being made by the government. We saw some news on sugar sector, so we saw some incremental movement. We've been seeing price hikes for diesel. So all this is where we need to be. On the flip side, no one knows whether this last 14 to 16 months of this term of this government will be there or not. So that is the real question, whether political instability can take the wind out of any positive movement made by the government. And unfortunately, calling politics is like rolling a dice. You can say anything and you may be right or you may be wrong.
Sandeep, how would you read into last week's institutional activity? For the first time in many months, foreign institutional investors have turned net sellers in Indian equities. Would you read that as the beginning of some kind of reversal, or last week's action in the overall scheme of things means precious little?
I think the selling that we've seen in India is actually a fraction of the selling that we've seen in China or in other emerging markets. I would think that it is part of the theme of sell-off coming off from emerging markets. Which has impacted India. India has its own specific negative factors, which we have just discussed, and I don't see a reprieve from all this. I see continued outflows come through. The real worry is what everyone clearly has been saying about is the rupee dollar, and the kind of deficit that we are running, and if flows are seen to be weak, the rupee can fall further. And that itself, more than anything, will be a drag on the markets. So the equity markets are at risk from both political uncertainty and the possibility of weaker outflows coming through in emerging markets and in India, and also hitting the rupee.
Sandeep, what happens to Infi, which is slated to come out with its earnings on Friday? Could it be a market-moving event, or do you think it's all priced in?
I think there's a lot of gaming happening around what the IT companies are going to say, will say but will not achieve, or have left unsaid but will be delivered eventually during the year. I think the reality is that the tech sector is a safer place to be than the rest of the market, because we have an external environment in the US which is improving, and a rupee which continues to remain weak or under pressure. So other than that, it's very difficult to say. I would stick to the large players. So I would stick with Infosys and TCS in that zone. I think we'll see market share gains and definitely better volume reporting by some of the large IT players. Other than that, whether Infosys guides, what is the meaning of that guidance, or whether it chooses not to guide, and whether there is any meaning to be ascribed to that, is all in the realm of short-term trading, which is difficult to forecast.
Do you think it's time to look outside the Nifty 50? Is it time to venture into mid and small cap stocks, because that's where value has surfaced up? I can give you a list of 50 quality mid cap stocks which are now trading at the historic lows.
Yes, you can look at that if you have patience to last out at least till the May for 2014, by which time maybe we have a better sense of what kind of government comes in. I think this is going to be a long haul for the mid-cap stocks. I think the macro is weak. The earnings story for corporate India is going to be weak. The flow story will be okay. I hope it is not bad. We need the flows. Mid-caps will be at the fringe of the equity markets, which is not going to do so well. So if you have patience and if you can stomach falls in prices even after this, it's a good time to be in mid-caps, but it will take at least 18 months.
So why don't you give me some names, and with the caveat that the volatility could be 15%, the downside could be 10%, but in next 2 years, maybe next 2.5 years, you're confident of a 30-40% appreciation?
I think, if one has to look at on a bottom-up basis where we find decent earnings growth. I think decent earnings growth is where we would, let's look at ITC. I think we'll at least see 15 to 20% earnings growth, at least 15% operating earnings growth for the business. So over 2 years, a 30% operating earnings growth is definitely possible. So that's one stock can get you those kind of returns. I'm not even arguing for a re-rating. You look at the pharma sector, we like Cadila Healthcare. We expect earnings to double from 25 rupees to 53 rupees from March 13 to March 15. So in the space of 2 years, there's a potential product pipeline which is coming through in the US, which can lead to doubling of earnings. So will it give you a 30% returns from here? Definitely. The stock has not done much for the last 2 years. So valuations are decent by pharma standards. So that's something which looks interesting. You look at the Glenmark, there itself we see earnings growth of in the region of 20% for the next 2 years. So we can definitely see 30 to 40% earnings growth coming through some specific stocks where we don't need to look at re-rating, and earnings will itself take you forward. You can look at some private sector banks. Private sector banks will be better placed, both in terms of the fact that NPA cycle will not hit them so badly, and they don't have pressures on capital raising. So even some of the large private sector banks can give you those kind of returns.
Sandeep, what happens in the auto space now, while the rest of the auto majors are still sort of reeling under pressure and trying to just digest the trend that the monthly sales numbers have thrown up? You've also got a surprise mover like a Maruti, which shot up 7.5% in just 1 day.
I think the auto sector will see slow growth in terms of volumes. That's going to be a given. We don't see a significant impact of rate cuts. We see maybe another 50 basis point rate cut from here onward for the next 6 months, and after that probably there will be some breather in the rate cut cycle. Will that impact volume growth? I think on the margin, yes, but not a whole lot. The auto sector will clearly be driven by stronger demand sentiment than exists today. We don't see any big turnaround in the demand sentiment for autos. The only thing I can say that for two-wheelers, if there is a decent monsoon that India gets this time around, then two-wheelers will see a rebound. But for four-wheelers and larger stocks, we'll need to wait longer. The only stock which looks interesting from here onwards is actually Tata Motors, primarily not because of what's happening in its LCV and HCV cycle, or in the passenger car business for Tata Motors, but because JLR is doing well, and that is holding up the stock. So we see good traction both in terms of volumes and margins for Tata Motors, especially in its JLR business. So we'll have to look at outside the domestic sector, even in autos right now.
Well, the volatility in Tata Motors surely has surprised everyone this year, even though JLR dispatch numbers have been pretty upbeat. Sandeep, the other big stock which has surprised most of the market men this year is Reliance. Things are incrementally looking strong for Reliance, but if I map the price chart of Reliance Industries, in quick time that stock has caved in by about 100 rupees plus.
The Reliance is a barometer of the broader market, in addition to the fact that the price reflects its own fundamentals. So clearly the cave-in is a reflection of the fact that market looks weak, and therefore as the as a top constituent of all indices, it clearly is taken a beat. So what's the outlook as far as we are concerned? I don't think this is going to be a large outperformer. We don't see the commodity cycle turning massively, or the refining margins for this really making a big change. We have had issues in terms of incremental investment and returns on incremental capital employed for this business. I don't see a big quick turnaround on that front happening. So unless we see a resolution of gas pricing, that may happen later after the elections, or whenever that happens. So we'll have to wait and see for those kind of triggers, rather than expect Reliance to perform just because it's fallen.
How do you propose investors should approach the policy end of the market? When I say policy end of the market, oil marketing stocks like ONGC, PSU companies like BHEL. How should one approach that piece?
I think as far as energy policy is concerned, we expect a continuation, at least for the next 6 months, of price hikes in diesel, and that itself is a good thing. It will go some way in reducing the interest per cost and burden, and improving the cash flow cycle of all the oil majors. ONGC and BPCL stack up well in that regard. As far as the other policy in terms of capex cycle and so on, and the impact that government can have, I would be very cautious.
Sandeep, exactly 6 months ago, if you would have told someone that diesel prices will go by about 6 or 7 rupees per litre, it was unthinkable. But yes, diesel prices have gone up. Markets are recognizing this policy reform, but nobody seems to be rewarding any of these stocks. HPCL, IOC, BPCL, all these key OMC stocks are trading almost at the lowest point of the year. So markets are recognizing this reform, they're excited about it, but stocks are doing nothing.
Stocks are doing nothing because there's no conviction that the government can follow through. There is time and again, we saw on the date when the RBI announced a 25 basis point cut on the 19th of March. The gains which happened got wiped out by the political announcement coming in from Chennai. So clearly there is a political factor which overhangs everything here. So that is where it is. It's deep lack of conviction about if the government takes up a path, it will be able to continue it to its logical end.
So Sandeep, where is it that we're likely to see the first signs of recovery whenever that were to kick in?
The recovery is something, unfortunately the kind of data that we see, it's most of it is actually looking back. The only regular clean set of data which comes to us real time is actually auto data. So auto monthly sales is somewhere where we can see some sort of recovery come through, and if we see that, that's more real time data on the economy, rather than any other order cycle for BHEL or any other such data, or any industrial IIP numbers. All these are mostly looking back and lagging data. The only data which is of any consistency, clean, and comes mostly real time is auto numbers. So I would look at that.
Final question, when do you think stock picking will make a fashionable comeback? Because there are two factors which are slightly favorable for individual stocks. Number one, valuations are extremely attractive. And number two, domestic institutional investors in the last 4 or 5 days, they've turned net buyers. So maybe the domestic end of the market, the real stock pickers, they are not getting redemptions.
I think structurally the domestic side still is seeing redemption. Insurance companies have seen redemption, so I don't think structurally anything has changed on the domestic flow side. If there's been some buying, that's fine. But if you take a 6 to 12 month cycle, they're still losing money. When do we see stock picking come back in fashion? When we see stability on the currency, and when we have some conviction in the political stability. I think what is the biggest overarching factor which affects investor confidence and willingness and ability to take risks is a stable political environment, and the fact that the pressure on the rupee is getting managed and mitigated over time. So these are the two factors. Once that in, I think people will definitely look at picking stocks.